Good evening, everyone. And we all heard that the feds cut the rate. However, mortgage rates are rising. So the average 30-year mortgage is about 6.79, depending on your scenario. I need to tell you the difference between a conforming loan amount, high balance, jumbo, because that also affects your rate and how these changes can make the difference on when you make your decision to purchase and refinance your home, right? But right now, basically what's happening is the bond market is concerned about the new president-elect's agenda, and we may see a continued uptick in mortgage rates. And basically what's happening is the feds had stated that, right, they wanted inflation to be at a certain level in order for them to cut the rate, right? And there's different economic factors that go into it, right? But basically right now, the bond market is like, hey, I don't know what we should do, but at this point, it looks like he's probably going to cut taxes. And if he's going to cut taxes, that's going to add to our deficit and to our debt, right? And so with that being said, we won't know again until he gets into office and makes the decision he wants to make. At the end, let me talk to you about the Fed fund rate, the 10-year treasury, and the 30-year mortgage, okay? So right now, the blue is the Fed fund rate, okay? It from 2023 to 2024, as we all know, it kept increasing. You remember when the Fed fund rate was zero? Well, if the Fed rate was zero, that's why we're able to have lower. This is the 10-year treasury, and then here goes the interest rate that we were fortunate to have at that time. However, as the Fed fund rate increases, right, you can see here, as far as the 30-year mortgage is concerned, it had topped off in the high sevens and some people 8%. Okay. Now we see it tapering off. And as the feds continue to cut the rate, it's all going to be about how is the market going to respond to it? Because that's really the key, right? Because right now we've had 2 Fed cuts and rates went down for a little bit, but it didn't last long based on the way the market was. Okay. So let's talk about the 30-year and the 15-year mortgage, right? So when you look here in October 2023, all the way to September of 2024, right? Rates had increased. And as you can see, a 15-year loan is going to have a lower interest rate. Why? Because there's less risk and you're paying off the loan in a short amount of time, where you have the 30-year rate. And as you can see here, in September, again, depending on your scenario, 6.08 is what this is what Freddie Mac is telling you. But again, remember, conforming, high limit, and jumbo also takes a play on what rate you would get. Let me know what your thoughts are. I really would like to know. Have yourself a wonderful evening, and I will talk to you soon.